Hey everybody, today we're going to be doing another dividend analysis, and today we're going to be looking at Amgen or AMGN. I wanted to do this stock because its dividend history in particular is very interesting, and it's just a good dividend stock to look at in general. As usual, we can start by looking at the yield, and here we can see it's sitting at just under 3% at about 2.83. Not a massive dividend by any means, but respectable. More than twice what the S&P is currently paying. And for a pharmaceutical, a bio company, it's nothing. It's not like an AbbVie where you're sitting at over 4% or something like that. But it's not bad. It's definitely a respectable dividend. And if we go over the dividend history, we can see that going back to 2011, we were getting 28 cents a share, and now we are getting $1.76 a share. That is a very large amount of growth. We're getting over 6 times the amount of dividend per share that we were getting about 10 years ago. And what's particularly interesting about this is that this wasn't a large one-time jump or anything. They have consistently been increasing the dividend by a very good amount. We can see we started getting about 8 cents more, then 11 cents, then 14 cents, and they've really been sticking around that 14 to 16 cent increase every year for the past, roughly 8 years, which is very good to see if you are holding this company over that amount of time. So very nice here, no cuts, no suspensions, very nice increases. Next, let's go look at our free cash flow and our income. We can see that in the last trailing 12 months, they paid about $3.79 billion in dividends, so let's keep that in mind. Going to our cash flow, last year we had, or last trailing 12 months, I should say, so the last calendar year, they did about $9.84 billion in free cash flow. If we divide that by our dividends paid, we are sitting at about a 38.5% payout ratio, which is very nice, well under our 50% ideal range. So if they do suffer any free cash flow issues, say they drop back to what they were in the previous 12 months, there won't be any issues there. They'll still be very, very able to pay out that cash flow as dividends. Now let's check the increase over the last few years. We can see that over the last 10 years, they've been doing very nicely increasing their cash flow, but over the last 5 years, they've stagnated. If we see here, about 6 years ago, we're looking about 9.5. We've increased very slightly, but we had a big jump to over 10 billion, and then we sunk back down under 9, but increased back to almost 10 billion in this past year. So that's something to keep in mind when you're looking at this. You want to check that cash flow, see if this is something that's going to continue, if they're really just going to sit around that 9 to 10 billion dollar mark, or if maybe in the next calendar year they shoot up back over 10 billion, maybe get to 11, something to keep track of. Next, let's go check our payout ratio of income, and we can see our net income last year was $7 billion. Divide that by our dividends paid, and we are at 53.4%. While that is well under our acceptable range, it is right above our ideal range of 50%. Not bad by any means, but a little less room to pay out because of the profit. Nothing bad by any means. If their profit were to, say, drop $500 million, this isn't going to affect the dividend at all, but just something to keep in mind. Something else to keep in mind is that, again, over the last 5 years, profit has been stagnant, so we really want to see the next year or two if we're looking at how they're going to be able to pay their dividends. We want to see if they can get back over this $8 billion mark for their income, that $10 billion mark for their free cash flow, to see if those dividends are really going to be steadily paid, if those increases are going to keep coming, or if those increases might slow down a bit. Now, how are they making this money? What is Amgen doing to create this profit and this free cash flow? And we can tell by their pipeline that they have quite a few drugs. I'm not going to go through and count them all, but well over 20 drugs in phase 1 through 3 testing, as well as the drugs that they're currently marketing. So what's nice here is that cash flow, that income is coming from a wide variety of sources. Obviously, some are going to be making them more money than others, but if one of their drugs does go generic, if there's an issue with one of their drugs, or if even a few, even a dozen of their drugs don't get out of phase 1 testing, they still have plenty of other ways to make money. So you're not going to see this income drop back down to these levels very likely, unless there's some ridiculous write-off. Same for your cash flow. You're not going to see this number drop back down to these numbers at all. Last, let's take a quick look at their balance sheet to see if they are over or underwater. We'd see their total current assets at about 20 million, total assets at about 60, liabilities at 12 and 53, so they are very much able to pay off all of their debt. We don't have to worry about them needing to use any of their cash flow to pay off their debt. Very nice to see there. So, who is Amgen for? Should you be buying it? What kind of investor should be looking at this? I would say Amgen is very much a prototypical dividend growth stock. As you can see, going over the dividend history here, if they continue to grow their dividend at somewhere between, 12, 13, 16 cents a year, that's going to be really nice if you're holding it. Unfortunately, if you're an income investor, the ship has kind of sailed here. If you were lucky enough to buy this 10 years ago when it was at $50 a share, your yield on cost would currently be well over 10%, and you could really just hold this until you die, barring some kind of issue with the company. But unfortunately, that ship has again kind of sailed. But that doesn't mean it's useless. If you are a dividend growth investor looking for a bio company, something trying to get into the pharmaceutical side and part of your portfolio, this is probably a good idea for you. It would really come down to between this and other companies. Do you like this company? Do you like Pfizer more? Do you like AbbVie more? Do you like so and so more? It would really just be going deeper into their financials, going deeper into the company, seeing which company you like more, and then just deciding which would be the best choice for you. But if you are just looking for a pharmaceutical company with a decent dividend yield and some growth potential, this is definitely something to put on your radar, definitely something to think about, definitely something to analyze more. I hope this helps, and thanks for watching.